Hi all, welcome to Commate Educator. So in today's session we are going to discuss important expected questions that may be asked in HSST commerce interview. So we have already discussed recent updates in GST, NEP 2020 and about PM Shri and important ministers in our previous video. So those who want to watch our video, link will be provided in the I button and at the end screen. So we can move on to today's session. So in today's session we are going to discuss important terms related to banking. So the first term is cash reserve ratio, that is CRR. CRR stands for cash reserve ratio. So cash reserve ratio is the percentage of deposits that a commercial bank should kept with the central bank as cash. So cash reserve ratio is the percentage of deposit or money that every commercial bank should kept with the central bank. For India it is RBI. So to kept with the RBI in cash. Okay. Then second term is SLR. That is statutory liquidity ratio. Statutory liquidity ratio. Statutory liquidity ratio, it is also a percentage of deposits that a commercial bank should keep with the RBI, but the difference is that it should be kept as liquid assets. That means the percentage of liquid assets that every commercial bank should keep with the central bank. Liquid asset meaning liquid assets include cash, gold, securities, etc. That means that can be easily converted into it includes liquid assets includes the securities that can be easily converted into cash. Okay. So in cash reserve ratio, only deposits are only in cash, but in statutory liquidity ratio, liquid assets are kept. So that is the main difference. Okay. Then comes bank rate. So bank rate. So bank rate is the rate at which the central bank lend money to the commercial bank. Okay, so bank rate is the rate at which the central bank lend to the commercial banks. Note, it is long term and non collateral loan. Okay, so bank rate is long term loan provided by the central government to commercial bank. It is non collateral loan. That means no collateral is needed for that loan. Okay, no collateral loan. So bank rate is the rate at which RBI, that is the central government, lend money to the commercial bank. Okay, then comes repo rate. Repo stands for repurchase agreement. Okay, repo stands for repurchase agreement. So it is the rate at which the central bank lends money to the commercial bank. But the difference is that it is short term and collateral based. Okay, it is short term and collateral based. So both bank rate and repo rate seems similar. That is, it is the rate at which the central bank lends money to commercial banks. But the difference is that bank rate is long term and non-collateral loan, but repo rate is short term and collateral based. That means it based on some securities. Okay, I think it's clear. Then comes reverse repo rate. The reverse repo rate is it is the interest rate by which the central bank borrow money from the commercial banks. So it is just opposite or reverse of the repo. So repo stands for rate at which central bank lends money to commercial banks, and its opposite. Reverse repo means it is the rate at which central bank borrow money from the commercial bank. Okay, rate at which central bank borrow money from the commercial bank. Money from the commercial bank. So I think you got clear. Okay, so current bank rate is 5.75. Current bank rate is 5.75. Then current repo rate is 5.50. 5.50 and current reverse repo is 3.35. 3.35. So that's all for today. For today's video. I think all should understand. എല്ലാവർക്കും മനസ്സിലായി എന്ന് വിചാരിക്കുന്നു. Thank you.